What's up guys, Josh Olfert back with another video, and today I want to tell you guys how I avoid paying taxes. Time to think like an investor. Welcome back to the channel. My name is Josh. I'm a CFP. I run a wealth management company, and we help all sorts of people, families, individuals invest in the stock market and learn about financial independence. So if you guys are interested in that kind of thing, hit the subscribe button, hit that like button. But today I want to talk to you guys about how I avoid paying taxes. And it comes in two words: the Cayman Islands. See you guys next week. No, but really guys, I actually don't have any offshore trusts or bank accounts or ways that I'm actually evading taxes. Today we're talking about avoiding taxes, which is very different than evading taxes. Evading taxes is like evading the police. It's like you're being tracked down, they want to arrest you, and maybe you've lied or done something criminal and you're trying to get away. That's a tax evasion. I don't condone tax evasion. What we're talking about is tax avoidance, which is just like trying to avoid the police, which is completely legal. Is that the lesson we really want to be telling? So, tax avoidance. What is my number one strategy? Well, it's actually super simple. What I do is I rack up, as you know, I try to get pretty frugal, not spend too much, but I do it on a credit card, and sometimes this works, sometimes it doesn't. But I spend as little as possible as I can on a credit card to get me through the month, to meet all the expenses that I have, and then I have my corporation pay the credit card bill. If that doesn't make sense to you, let's dive into it. How exactly does paying my credit card with a corporation suddenly save me money in taxes? Now, if you are unclear on how just taking my corporation and using it to pay a credit card bill, I can save my money in taxes, it's really not that complicated. I think a lot of times people hear the word corporations and they go, oh my goodness, that's way too difficult. That's for accountants and financial people. I don't want to deal with that today. I want to make dealing with corporations and how they can save you taxes as simple as possible by showing you how I save money with my corporation. To make corporations as easy as possible, there's really only two reasons why the world or the government allows there to be corporations. First things first, they want to incentivize risk-taking. And second, I guess, they want to reward people who are reinvesting. They want to reward people who are putting money back into the economy and being productive with it. So what do I mean by risk-taking? Well, I mean, it's a really cool idea that we have some sort of institution like a corporation where your idea can die instead of you dying. For instance, we've all had a horrible business idea, like, let's say the Uber for baseball gloves. I don't know, you're out at your slow pitch game and someone leaves a glove. I don't know, some stupid idea. And you think to yourself, wow, I'm really not sure if this idea will work, but I want to try it anyways. A corporation has this thing called limited liability. So you set up a company and you can create a system or an entity where the business can fail instead of you having to go bankrupt. If your corporation goes bankrupt, you don't go bankrupt, the company just dies. So what I would say in summary is that your idea can die instead of you going bankrupt. And the second thing is that governments want to incentivize people to reinvest back into the economy and to spend rather than just hoarding money. And that is the reason saving money with my corporation is as easy as me paying my credit card with corporate dollars. Let me explain. So I'm a visual guy, I love to draw things out, and I want to show us exactly how this can work. So let's talk about this whole idea of saving money with a corporation. Let's draw this first. So let's say up here, we have this one little entity, it's this box, we'll say. That is the corporation. We'll say that's where money flows into and out of, and that's kind of their bank account, for lack of a better word. Then we have a squiggly line that separates our corporate life from our personal life. Let's say here's Josh down here, and quarantine's getting out of hand, so he's got some really crazy spiky hair in the front, but he's also still got a pretty tight fade. And all of this being said, Josh has his own bank account down here. This is his personal money, we'll say. So there's a division between these two things. Now, as we all know, in any business, there's sales and there's revenue and there's money that flows into the company, right? So money flows into the company and it piles up and piles up and piles up. And let's say over the course of a year, the company earns $120,000 in revenue in sales. But what we also know is that companies pay expenses. They have to pay for their office and they have to pay for all sorts of things like that. And let's say, for the sake of example, this company has $40,000 every single year just in expenses. So we'll say this is red, and this is money flowing out of the company. So we have revenue and we have expenses. Now, what the owner of a business, let's say me in this example, can decide to do is pay themselves a salary. At the end of the day, I have to get paid. I have to, pay my bills and all these sorts of things. So what I'm going to do is, in addition to that $40,000 of expenses, I'm also going to pay, let's say, $60,000, not out, but into my bank account as a salary, right? So we would call this salary that is coming over, and it's an expense to the corporation, but it goes into my pocket. So that's kind of how that mechanism works. Now, if you run a business and you have revenues and you have expenses, what's left over? Well, it's pretty simple. It's profit, right? Revenue minus expenses is equal to profit. So in this example, if 60,000 went out to pay me salary and 40,000 went out to pay for expenses in the business, this leaves what? Well, in profit, we have $20,000 left over. Following so far? Okay, fantastic. So this is where things get a little tricky. Now, let's talk about what the tax situation looks like here in this scenario. So, of course, we're gonna have to pay income taxes on all sorts of things here, but here's something we have to realize about corporate taxation. I don't pay tax on all $120,000 of sales that's coming in. I pay just two different taxes. I pay tax on the corporate profits. We call this the corporate profit taxation. That's what that is. The $20,000 that is left over after the expenses and after paying me salary, that is completely taxable. Now, here's the really cool thing, and here's why corporations are tax advantaged. Corporations don't get taxed, like I said, based on their sales. They get taxed based on their profit. And not only do they only get taxed based on their profit, the tax rate is significantly lower. So for most people in a corporation, this might be in the range of about 10% of tax you're gonna pay on the profits. Now, in addition to that, I'm also gonna have to pay tax on this 60K salary. I can't just pay myself salary out of a business into my personal account and just not have taxes to pay on that. So typically in most places, if I earn $60,000, I'm gonna probably have to pay, on average, not a marginal tax rate, and if you don't understand marginal and average, go Google that first, but on an average tax rate basis, probably about 25%. So when we look at this, there's two taxes that I have to pay. The corporate tax, which is 10% on 20,000, and the personal tax. And that is equal to, we'll say 25% on 60,000. So in this example here, 10% of 20,000 is $2,000, and 25% of $60,000 is $15,000. So in this scenario here, we have $17,000 in taxes that we have to pay. That comes from an assortment, a collection of two different things: our corporate taxes, which I just deleted, our corporate taxes over here, and our personal taxes, which are $60,000. Now, let's compare that example to if I had just earned $120,000 in salary, right? So let's take me again here, and there's no corporation involved. This is like what most of us live with, okay? I earn $120,000, and if I earn that much as salary, that means I have to pay tax on that full $120,000. I don't, get to write off these corporate expenses. I don't get to use the lower corporate tax rate. I have to pay tax on all this money at one time, which is quite a bit. For most people and in most places, a 30% tax on $120,000, what does that mean? That's about $30,000 in taxes, right? It's approximately around there. So had I earned this money in salary, had I earned the same amount in salary, I would have owed $30,000 in taxes, whereas now, because I've kept money in the corporation, paid some expenses out of there, and only taken out what I need, the $60,000, we end up only paying $17,000 in tax. So the difference between these two numbers, that's significant. That's $13,000 that we avoided by using this corporate tax structure. So now, what does this all have to do with me paying off my credit card with my corporation? Well, not to make this too complicated, but instead of paying myself a fixed wage, like a lot of people get paid every single month, they're paid $1,000 bi-weekly, or they're paid $3,000 a month into their account every single month, I only take in salary what I need to pay for my expenses. So this is what I mean about the credit card. Every single month, I don't really carry much cash in any of my bank accounts. I run up a credit card bill with all my expenses, which brings me into the negatives. And then every single month, I'll have the corporation take money out of its revenues and pay that off. And at the end of the year, I can go to my accountant and I can designate that as salary. What happens here in conclusion is that I am only ever taking money out of the business that I need to spend. This way, I can significantly reduce this amount I'm taking in salary because I'm really only ever paying myself as much as there is expenses. For most people, they're paid enough that they can take a vacation and they can put some money into savings every single month and all those sorts of things. But for me, I do my best to keep my expenses as low as possible. Work sometimes, other times not. And we take money out of the corporation to pay that off. That way I am paying the least possible taxes.